AXP daily charts. Microsoft hourly on the way up. Current situation of Tesla. Microsoft on the downside. Welcome to ChartDecoder Global. I am author of Decoding Charts. Every week we'll be exploring unique strategies in technical analysis, strategies that can truly change the way you see the markets and trade them. Today we decode rule number 7 of ADX. The story of falling ADX peaks, whether you call it ADX Divergence or whatever. Let's move forward. But before that, let's run through the rules of 1 to 6. First rule, when ADX is below 20, well, it's weak or there's no trend. Extremely low ADX is a compression zone. From a flat low, ADX rising, we may most likely get an explosive move. Rule number 4 says it this way: ADX U-turn is falling from a peak and thereafter ADX makes a U-turn from 22 to 26 odd region. Well, that's again a trend ignition point. Rule number 5, ADX peaks at 40 to 50 plus levels, brace for turbulence. Well, you know the old saying Jesse Livermore said once, there's a time to go long, there's a time to go short, and there's a time to go fishing. Well, when ADX peaks and thereafter moves down, that's the time when you should pack your sandwiches, take your fishing baits, and go to a nearby river. Point number 6 is quite important. Price move without ADX support is a sign of caution. But the most important part, ADX rule number 7. Falling ADX peaks is a signal of a coiling market. Let's move forward. Let's dissect this one. It's something like this. Take it this way, that a series of hills and every hill representing a peak of ADX. Well, the first peak is the highest. The second one is smaller than the first peak. Well, but the third one is still smaller than the second one. And thereafter, finally, the planes come up. If ADX forms something of this type, which you'll be seeing it in chart shortly, well, that's quite an important sign. Before we move on to the charts, let's plan our rules ourselves. Well, falling ADX is certainly nothing but an energy buildup. Price may look steady, but market is winding the spring and next ADX rise will be a breakout. To understand this in details, let's straight away go to some charts and check it out. The first chart, American Express Company. Watch here. What is the ADX value here? Well, 41 odd levels. The next peak, the ADX value is somewhere around 33 odd levels. The third peak is 30 odd levels. ADX goes below 20, stays there for some days, and then the move picks up. Well, I'm using a 50 SMA here. You are free to use any indicator which would suggest some trend identification strategies and then ride the trend and see what happened from 150 odd levels to 215 even before buckling. Or had you been taking it this way, if ADX starts to move down, I get out. In that case also, from 150 odd level, you would have reached 187. That's quite impressive. Well, as you observed in the chart of American Express, it took almost 7 to 8 months to form. Should we have to wait for so much time? Now let's take it this way. If I shift down to the hourly charts in MSFT or Microsoft, what happens is it takes around from 8th of November till 11th of January. In an hourly chart, it takes around 2 months. It might be a little more or less. Nobody can say it for sure. But watch here, the falling ADX peaks right from 50 odd levels. It had come down. The next peak was at 32. The third peak was at 26. It had come down to 15 odd levels on the lower side, and then see the rush on the higher side. Here it is. You catch the trend anywhere down the line, and you can ride for safely from 370 levels to 400 odd levels. Well, that's quite a good amount considering that we are looking at an hourly chart. Does it mean that the breakout will be on upside? Well, obviously not. You have the plus DI to decide, you have the minus DI to decide, you have moving averages, and hosts of tools are there in charting software to decide which way the trend might be. But the trend will certainly be fast. And here, as we are seeing it in MSFT again in hourly charts, here the breakdown took place on the lower side from 10th of February to 15th of April, almost 2 months, the spring had coiled. And the resultant was, well, from 410 to 15 odd levels, it had fallen to somewhere around 385, but in one shot, 391. That's almost 5 to 6%, quite a hefty sum if you are considering an hourly chart. Mind it, the beauty of this particular system is it can be done on any time frame, be it from 1 minute to 1 hour to weekly or whatever be it. So let's go to the rules and check out what are the things we need to watch out for. Well, falling peaks is coiling. It's not weakness, neither is strength. Well, check the DI lines for bias. Expect volatility to surge. That's the biggest part. When you expect volatility to surge, that means you will be getting higher high or higher low. Prepare for a breakout. Conversely, prepare for a breakdown or a breakout on the bearish side. ADX will never predict your direction. It will warn, well, a storm is coming. Before leaving, let me take you to a chart which is where this type of falling peak has formed and ADX is making a base at around 10. You got it right? We are talking about the chart of Tesla, and just watch here, peak, lower peak, and the plains. To visualize, think of the Alps in Europe, Mount Blanc, the tallest, like the ADX peak. Matterhorn, lower but iconic, like the second peak. Then the charming town of Zermatt below, like the quiet consolidation. And finally the Swiss plateau, flat, fertile, calm. Well, nothing is calm here. A storm is about to come. That's what ADX is indicating in Tesla stock. That's it from me. Thank you very much. And if you did like it, do subscribe to ChartDecoder Global channel, a weekly decoding of global markets. See you again next week.